Hey guys, hope you and the families are doing well. In this short video, I'm going to take you through what I think is one of the most powerful swing trading breakout setups, which is an inside bar within the context of a high type flag. So I'll take you through my current trade in Rocket Lab, which is up 14% in 2 trading sessions. Now, Rocket Lab was a stock that I was targeting in my November 5th session plan. You can see that there. I'm currently running a trial to access my platform. So if you're interested in that, I'll put a link to that in the comments section below. Before we get into it, I'll let you know that Market Surge are today's video sponsor. If you're interested in a discounted trial, then you'll find a link to that in the comment section and the description below. So I'm sure many of you would have read the book by Thomas Boswelski called The Encyclopedia of Chart Patterns. Now, what Boswelski found from studying these chart patterns was the high type flag was the most powerful and explosive continuation chart pattern there is. So in my own trading, I really like screening for and trading high type flags, especially when there are inside days that form around the 10-day EMA and or 21-day EMA. So just on the point of the moving averages, the 10-day EMA is the black line on my charts, which I took an entry through the high of this inside bar on October 11th, and then also the inside bar that forms on the 10-day EMA on November 4th, and then I'm targeting the entry on November 5th as it moves through the high. I really like inside bars around 10-day and 21-day EMAs, as you can see with Rocket Lab earlier in September as well. So inside bars in leading stocks around 10-day EMAs or 21-day EMAs are really going to get my attention. So let me just take you through the general guidelines for this setup, and then we'll start going into some of these specifics. So what do you see with Rocket Lab? And a lot of this is about reverse engineering. What are the best setups do? So this is where you study history, you study setups, and you note common characteristics. So if we look at some of the common characteristics that we see with Rocket Lab here, in both instances of this inside bar that forms on the 10-day EMA and this one here. So remember, I take my initial entry through here, and then I'm adding here, and I also added on the shakeout to the 21-day EMA with what I call an in Morello setup, which is an intraday mean reversion long, which I'm not going to talk about in this video. We're just going to keep it focused on these high type flag breakouts. So what do you notice? Well, price in both instances is above the 50 and above the 200-day simple period moving average. The 50-day on my chart is the purple line, and the red line that you see down here towards the bottom of the chart is the 200-day simple period moving average. So a lot of it, when you're screening and you're scanning and you're building your mental representations for, wow, what is a 10 out of 10, a 9 out of 10 high type flag setup look like? What are the common characteristics that you see with Rocket Lab and you see with 50 others, 100 others, 1,000 others? What do they look like? What do they tend to exhibit as the base is building? So you really want to split it into 3 things. What happens pre-base, in the base, and post-base? So in terms of pre-base and in the base, well, actually, I want price to be above the 50-day and 200-day simple period moving average. That can make my screening efficient as well, as if I'm specifically looking for these types of setups. What you tend to see as well, a common characteristic, is strong rally on increased volume before the continuation base. So in both instances here, you get your flag type patterns build. There is one. This is more of like a flag / Davis box S with a nice big shakeout in the kind of latter part of the base as well. We'll talk about that shakeout demand tail shortly. But what do you notice each time? Well, before the first one, note the really positive price advance here and note the increase in volume. This is what visually a lot of strength, a lot of buying, a lot of accumulation looks like, a lot of interest as well. There's a lot of interest. We can see it in the volume and we can see the increase in price. Price then pulls back down. Note how the volume then dries up in the base. That's another subtlety as well. Then when it starts moving higher, note the increased volume relative to the dry up in the base. And then you start to see more pops in the volume, more pops in the volume. You can see it in here, in here, in here. These 2 widespread candlesticks, I call this bullish synchronicity. So there's a synchronicity between the positive price action and the increasing volume coming through as well. So it's a widespread candlestick. You see this one here and this one here on increased volume relative to the 30-day average, which is the black line. Also on these bars, it's a subtlety, but note where the opening price is in relation to the overall range of the candlestick. Do you see how the opening price is pretty much on the low of the day, pushes up, opens on the low of the day, pushes up. This one over here as well. Note how it opens on the low of the day, pushes up. That is signaling to me as soon as the market opens on this bar, on this bar, and on this bar, buyers are stepping up immediately. Now, what is the strength of the buyers? Well, you can see that there. Look at the strength coming through. Look at the increasing volume in all of those instances. Okay, that's interesting that we're seeing those pops in the volume, the positive price appreciation, which I refer to as bullish synchronicity, before the base. So we're thinking pre-base, in the base, and post-base. So this is pre-base action. What then happens in the base? What then happens post-base? This is where you build out your mental representations. Peak by Anders Ericsson, all about deliberate practice, is a fantastic book for learning about mental representations and building skill set and building expertise. Then we have supportive action in the base around the 10-day EMA or 21-day EMA. So remember that the black line on my charts is a 10-day EMA, the blue line being the 21-day. So if we look at this one here where I'm taking my prior entry, here's the black line here, the 10-day EMA. Note how it pulls down, okay, holds above a little bit here. You get a nice shakeout underneath the 10-day EMA. You see supportive action, and actually the volume on that pullback is below the 30-bar average. There's not that many people selling, followed by the inside day. Now on the next base here, what do we see? Well, there's supportive action around the 10-day, and then price pulls down, shakes out to the 21-day EMA on low relative volume versus the 30-bar average, telling me there isn't that many stop losses being hit. There's not that much supply coming through, because I would be thinking, okay, this region in here, there's going to be a lot of stops. I'd expect to see a big pop in the volume. You're just not seeing it. Tells me there isn't much supply, but supportive action around the 21-day EMA. Now the kind of kicker here is the inside day on or near the 10-day EMA and or 21-day EMA. So over here you have an inside bar around the 10-day 21-day EMA. Note the rally coming through. This would not be the context of a high tight flag here, much more of kind of a lower pivot in the base. Look how the volume dries up, but note the inside bar there. Note the inside bar on the 10-day EMA. Note over here the inside bar on the 10-day EMA. And now we'll go into some of the kind of bonuses to look for. So it's a free tool. Search my name in the TradingView indicators, you'll find it. This is my relative strength line. It's currently set for Rocket Labs versus the S&P 500 as the applicable major indexes that applicable major index that I want to be comparing the relative strength to. So relative strength line, 52-week highs. I really like leading stocks in the market that are hitting 52-week highs versus the S&P 500, and then they build a really nice continuation type base and form inside bars around 10-day EMAs and or 21-day EMAs. So again, we're studying this and we're building the mental representations out for what happens pre-base, what happens in the base, what happens post-base. So if you're looking at this in both instances, pre-base, so we'll look at this action here and then we'll look at this action here as well. What do you notice on the relative strength line? Well, one, it's in the context of a nice uptrend in both instances, and two, it's hitting these blue dots. 52-week highs. This is an extreme sign of strength. This is what the strongest stocks do. They all hit 52-week highs relative to the S&P 500. So in both instances, pre-base on the rally, 52-week highs coming through. Here, pre-base in the rally, 52-week highs. Now, one of the, just a little, I could have put it as another bonus, a real sign of strength. Like, I think one of the strongest signs of strength a stock can give you is it hits 52-week highs in the base. In the base. If a stock is basing and it's hitting 52-week highs, it's telling me it's ridiculously strong. Why? Because it probably means the market is pulling back in, whereas the stock is just going, no, I'm just going to hold up. Even better if it's then finding supportive action around the 10-day EMA and 21-day EMA, plus hitting 52-week highs in the base. That is an extreme sign of strength. The stock is literally saying to you, I'm really strong. I want to go higher. As soon as that market pressure release, I want to go higher. I want to try going higher. And again, there's many different things that you're trying to train your pattern recognition to see strength, to see leadership, to see really high quality setups that form. So this stock here is hitting 52-week highs in the base. It also hits a 52-week high the day before, so you get this nice shakeout, bullish reclaim of the 10-day EMA. So on this bar here, it's forming a 52-week high on the relative strength line. It's still in the base. Then even better, it puts in an inside bar. So then the risk versus reward is really tight. Now on the inside bar as well, volume below the 30-day average on the inside bar. That's just telling me there's not that much selling coming through. I filmed a video last week where I was talking about from periods of contraction come expansion. I was talking about the Toby Crabell setups, NR4s, NR7s, 2-bar NRs, 3-bar NRs, the Minervini volatility contraction point. Volatility tends to contract before it expands. Then when it has expanded, it tends to contract. So if you're looking at this here is a tight period of contraction followed by expansion, followed by a period of contraction, followed by expansion, followed by a period of contraction, followed by expansion, followed by a period of contraction, followed by expansion. So the periods of contraction can be over a single session, such as an inside day, or over a period of sessions and or weeks before there is then an expansion and a trend either to the upside or the downside. Remember, stocks, indexes, ETFs, whatever can only move in one of two ways. They can move in a trending way or they can move in a non-trending way, i.e. they are either trending up or trending down, or they are just going sideways. So that is the contraction, and then the expansion will be a trend up or a trend down. That is the only way that stocks, Bitcoin, cryptocurrencies, the SPY, the triple Qs can move. gold can move. That is how things move in the market. Is just a timeless phenomenon that you will see. Now another one here, the initial stop loss percentage, half to 2/3 versus the 20-day ADR percentage. Now this is just a useful way to keep risk in check, I think, on an individual stock basis. Now I like to have my initial stop losses pretty tight. Anything over 5%, I really got to think that's a really good setup. So for me, low single figures is invariably where I'm trying to keep initial stop losses. However, sometimes here, around 3%, 4%, it may seem, wow, that's a little bit. I'm not going to probably trade Amazon or an Apple or a Microsoft with a close to 4% initial stop loss. However, a stock that has, now this will increase a little bit here because this is the current day, okay, 20-day ADR percentage of 6%. Now that is the 20-day average daily range percentage of the stock on individual candlesticks over the last 20 days, excluding gaps. It gives me a feel for how quick the stock may or may not be. It's pretty unlikely that Microsoft, unless it's a big earnings gap, that Microsoft is going to go up 14% in 2 days. It's just not that kind of stock. ExxonMobil is probably not going to do that. Amazon is probably not going to do that unless it is potentially on the back of, say, an earnings gap or a news gap or something like that. However, Rocket Labs here, well, in the space of 2 days, it's only up 2 times its 20-day ADR percentage. It's perfectly reasonable to think that. Here as well, you can see, okay, what did it go up? 35% in about 3 sessions. Down here as well, what did it go up? Well, it went up about 25% in the space of 3 sessions or so. So the character of the stock is, well, it can go up 20%, 35%, whatever it may be in a couple of sessions. The stock has the character of doing that, and the 20-day ADR percentage can give you a feel for how quick the stock is. If you keep in your head the average for the Qs and the SPYs, 20-day average daily range percentage is around about 1%. So this stock here is many multiples quicker than the major indexes, which are the ones that I more so want to be focused on trading, the momentum leaders of the market. So my initial stop loss here of, let's just round it up to 4% of an ADR of 6% is about 2/3 versus the 20-day ADR percentage. That's very respectable, especially in the context here of a high tight flag pattern. So just to summarize everything there in terms of your screening for high tight flags, I'd be looking for stocks that have made a significant advance. I'm not an absolute stickler for the rules that, oh well, it's got to be up over 100% and it's got to do it in 8 weeks, and the base can't pull back more than 20. Like, I just apply a lot of common sense, use my eyes for what I think is going on from a supply and demand perspective. But if you're screening for these type of stocks, these type of setups, I want it to be above the 50, I want it to be above the 200. A lot of the better ones will also set above their 21-day EMA. There'll be a significant price rally over the last couple of months, 8 weeks, 2 months, 10 weeks or so. So looking for stocks that have gone up, say, over 50% during the prior 3 months is a pretty good metric as well. And then using my eyes visually, there's no magic pill in terms of the screening. You've got to do the work, analyze the stock. Okay, how is it setting up? What am I seeing? What am I seeing the brother sister stocks do? Is the theme strong? Space theme right now is very strong indeed. Am I then seeing nice shakeouts below the 10-day or the 21-day EMA? Am I then seeing the inside bars come through? What am I seeing in terms of the relative strength? Do I see those blue dots, those 52-week highs? Am I seeing increasing volume coming through on the rallies? Am I seeing volume drying up on the pullbacks? Am I seeing the volume below the 30-bar average when there's that inside day around the 10-day, 21-day? Is the initial stop loss, say with a buy stop limit order, targeting it through the high, stop underneath the low? Is that half to 2/3 the 20-day ADR percentage? So I really hope that video there has helped you thinking about high tight flags, thinking about inside bars within the context of high tight flags and or very strong continuation type bases, and looking for them around key daily moving averages such as the 10-day EMA and or the 21-day EMA. So thank you very much for watching. Thank you very much for supporting the channel, and as always, I look forward to seeing you in a future video.